All right, so welcome in today. We're going to dive into mining in the Bitcoin space and really take a deep dive on where not only the market may be going, but also some of the miners and how they're responding to current market conditions. Dive in deep. My name is Paul Barron. Welcome back into Tech Path. Of course, joining me today is a friend of the network, and that is Miss Sue Ennis from Hut 8. Great to have you back on the show.
Thank you so much for having me. Really excited to be here. Tons to talk about today. It's been a crazy market, and there's lots to get into.
Yes, Hut 8. Definitely a lot of news within and what's happening around Hut 8. But Sue, give me kind of a rundown currently of what your current status is today.
So Hut 8, because we're one of the oldest miners in this space, effectively this bear market is not our first rodeo. So we've been through a bear market before because we've been in production since about late 2017. So we went through the 2019 and early 2020 bear market. And what's really significant about that is in this most recent bull market, we had 16 new publicly traded miners come to market in the most recent bull market. And that was fantastic. The margins were incredibly compelling. Obviously, it made a lot of business sense to come in and get into mining in that bull market. But we really think it's a tremendous advantage that we've been around for so long because we've learned from past bear markets how important it is to prepare for the next bear market in a bull market. So what do I mean when I say that? Hut 8, we're one of the original holders of Bitcoin on the balance sheet. And last bear market, holding that Bitcoin on our balance sheet actually enabled us to survive and thrive and take out a loan during the last bear market against that inventory. So we remain hodlers during this bear market. We have over 7,000 Bitcoin that are currently unencumbered. Also during the last bull market of 2021, people thought we were crazy, that we weren't making, extraordinary equipment purchases at prices that we, again, thought were much too expensive because we were seeing equipment go in the spring of 21 for about $90 to $120 a terahash. And that same equipment we had picked up in the previous bear market for $20 to $30 a terahash. So I guess, again, Hut, our balance sheet is incredibly strong, incredibly intact. And that comes from the fact that because we've been around for so long, we understand the importance of always being prepared for the next potential downturn.
So I think with miners in general, and one thing that we've watched and observed and also done a ton of research on is just, kind of the overall impact that miners are having within this particular, in essence, the bear cycle we're in today. Obviously, we've seen a downturn in hash rates. We've obviously seen a lot of miners that are starting to make some exodus in terms of their Bitcoin holdings. Hut 8 not necessarily being one of those, continuing to hold at that. When you look at kind of the macroeconomic, because the macro side of things that we are seeing today is not anything that we've seen before during any of these bear markets in 2017 and 18. We did not see these kind of scenarios. And really, if you look back even into 2012, we haven't ever seen these kind of macro pressures from high inflation, obviously a global conflict in Ukraine, the issues that we are dealing right now with potential recession brewing. And then obviously the pandemic kind of leading into all of this. Does that kind of change the course in any way through this bear market as you see it?
Well, I think, because this current drawdown is macroeconomic driven, it has driven all correlations to effectively one. So it certainly does affect everyone in every asset class across the board. Miners are not exempt from that. But I think, at least what I've been saying to investors, I don't want to say exciting about this bear market, but what's very unique about this bear market from a crypto perspective is how different it is from the 2018, 2019, 2020 bear market for crypto. I'm not talking about, obviously any other class. The industry has changed exponentially, and it is incredibly different and incredibly exciting. So what do I mean when I say that? Number one, the amount of institutional participation in this space. So you have pension plans adding. You have the JP Morgans and the Morgan Stanleys of the world providing product in crypto. You have Fidelity enabling their clients to purchase Bitcoin in their 401ks. Shopify, PayPal, Visa, MasterCard now all have crypto rails. That didn't exist in the last crypto bear market.
Right.
The amount of sort of progress that's being done on the regulatory side of things with the Lummis-Gillibrand bill, bipartisan bill with respect to crypto regulation, Biden's Responsible Financial Digital Innovation Act, sovereign nation adoption of crypto. Even if you look at certain things like on-chain metrics and market structure with respect to liquidity with Bitcoin and crypto. The Lightning Network is at all-time highs in capacity, and even Bitcoin transactions did not spike when Bitcoin price itself was spiking in 2021. So as much as, yes, crypto is suffering from the same macroeconomic headwinds that every other industry, especially in the high growth and tech space, is suffering right now, it is a lot different than the most recent crypto bear market. And so that is incredibly compelling, especially in terms of the longevity of crypto in this space. And if you look at, for example, the 2000s tech boom and cycle, and if you sort of parallel some similarities between crypto, you certainly had over-levered companies like Pets.com, eToys, Cosmo,
sure.
but again, the same things has happened in crypto, where there's been over leverage, a lack of opacity into institutional trading, and quite frankly, a lot of poor due diligence, the same way that there was with internet stocks in the 2000s. But what happened after the 2000 crash? You saw the rise of Amazon. Microsoft eventually regained its footing. The Googles of the world emerged from the ashes. And I think a similar thing is going to happen with how crypto survives and what comes out of this global bear market that is going to be unique to the crypto industry.
Yeah, we've kind of been talking about that quite a bit on the show. Is this dance has been done before. We've seen it, especially from a technological standpoint. I want to get into a couple of things from from the hash side of things, especially as we look and forecast what we might see in terms of Bitcoin production over the next little bit. Currently, quick question, 100% self-mining company. Explain what that means.
So some of our peers actually went out into the market and purchased their Bitcoin in the market. One of our peers did that in January of 2021 at about 30,000. Then we had another one of our peers do it, I believe, in the fall at about 43,000. So Hut 8 has never gone out into the market and purchased our Bitcoin because we think that sort of defeats the whole thesis and narrative of being a Bitcoin miner. And so we have only mined our Bitcoin ourselves and put it on our balance sheet that way.
All right, so I want to thank our sponsors today, and that is Emrit.io. When you're thinking about helium mining, this is the company to maybe take a look at, because it is one thing that they're approaching, and that is the ease and process to actually start and getting going on mining. So right now you can actually order a device, which that's probably one of the biggest things that you face right now on helium miners is the lead time to get one of the miners in and to you. With Emrit, you actually can get the miner very quickly. You order it, you can activate it, and then start mining. You go through a process of setups. I like the fact that, one, they're a helium partner, and when you look at partnerships, I think this is a key thing in any kind of project, is you need that kind of solidity that kind of connects these big projects with projects like what you're seeing here with Emrit. So one-time hosting fee. This, I think, is going to really start to ramp up as we see more and more technology lean in on this, including things like 5G, a lot of IoT traffic starting to move in. So the demand for this kind of network architecture is going to be very, very serious. If you're looking at going into Emrit for Business, they can go in and start developing or work with you in developing a fleet for your businesses. So depending on how you are going about this, whether you're doing it as an individual or maybe as a business, you can look at deploying a whole layer of Emrit devices and going with this same approach. So, and you can kind of see here, there's a lot of different use cases for this, from retail franchise systems, public spaces, commercial real estate, property, utility monitoring, all sorts of things that really kind of play into the enterprise side of this. So make sure and check out Emrit.io. I want to thank them for sponsoring this episode. All right, so Sue, obviously you're holding around 7,000 Bitcoin right now. We know you're producing around 300 a month. Is that trajectory for hitting 10,000 within a year reachable? What are your thoughts?
That's a really good question. So if everything were to stay the same right now, that is a number that we could feasibly potentially obtain. But as your audience knows, the entire Bitcoin network is incredibly dynamic, and it's all contingent on your ability to win that coin is all contingent on the strength of the actual network itself in terms of how many people are mining, how difficult is it. We certainly do see a potential opportunity not only for us to potentially pick up equipment at rock bottom prices, because a lot of miners paid for equipment again at those peak bull market prices, and they now may subsequently have to start selling them in order to keep their balance sheet intact. And again, it's really tough to say, but it is all contingent on how many people are actually mining on the network. What is the difficulty rate getting to? And again, we do see potentially that network hash rate coming down a little bit more, because number one, there are, as I said, some miners out there who will not be able to fulfill their equipment orders from a financial perspective, and so it may end up actually having to sell that equipment. Or number two, we do see some other miners who actually have much older machines. For example, I know that there was about 25% of the network was being mined with S9s, which is one of the oldest models of mining equipment out there, and that will eventually have to, those machines will eventually become obsolete if the network difficulty does continue to rise. But again, it's really hard to make any predictions right now with just how insane these markets are. And so Hut 8 is really taking a wait and see approach. And again, we've taken a balance sheet first to everything in terms of how we build our business, so that we can be opportunistic in this bear market to go shopping, to do some meaningful M&A. Our stack of Bitcoin is currently unencumbered, but if we have to encumber it so that we can continue to grow and not do any sort of dilutive financing, then we'll do that. So that's sort of the lay of the land there.
Okay, so a few things there to unpack a little. When you look at, because you're talking M&A potentially, and we're seeing a lot of pressures from the current market conditions where we've got staff layoffs occurring at some of the biggest exchanges out there, companies under duress. Obviously, the situation over at Celsius, what we've seen with Luna, there's been some pretty big asteroids that have landed into the crypto space this time around. With all of that being the case, it also presents, like you mentioned, some great opportunities for the really solid projects and solid companies to really accelerate on this. Now, when you look at the mining landscape right now, there's several companies that kind of lay in the land right now that I would consider, blue chip level, Hut 8 being one of them. If you look at that lineup, when you look forward in the next, say, 24 months, what does the mining industry look like in 2 years based on what you guys are seeing currently?
So we certainly do see a case for there being some major consolidation and potentially only being 4 or 5 major players. We would not be surprised to see major energy producers like the Exxon Mobils or the ConocoPhillips get into the market. Right now, both of those companies have proof of concepts going with smaller mining companies to effectively reroute methane emissions and flared gas towards mining operations. So we could definitely see some larger blue chip energy producers getting into this space, which would be really interesting. But again, at the end of the day, it's just so incredibly volatile. And until we get a better sense as to where inflation is at and if it's coming down, we think tech stocks and mining stocks are just going to continue to trade alongside these rate increases. And it's going to really remain to be seen who can survive this volatility over the next couple quarters. But yeah, I think 2 years from now, we're going to see some major energy producers who have a mining operation. Again, a company like Hut 8, we're incredibly, we're always going to be core miners, but we're really focused on, okay, so what's sort of the next stage of this asset class? And I was on your program a couple months ago talking about how we bought data centers in January. And these data centers came with 400 existing cloud and co-location enterprise customers. And we paid about $30 million for a business that was paying about 19-20 million in trailing revenue. So we bought a business that it has sticky recurring revenue that is completely uncorrelated to mining. So even if Bitcoin went to zero tomorrow morning, we would still have, a sticky line of revenue paying us cash. But also these data centers, we're building effectively, and we have built what we see as infrastructure to support the growing Web3 and blockchain ecosystem beyond just mine and hold Bitcoin. And so I think, we're going to see a convergence of Web 2 and Web 3 companies from an infrastructure perspective coming together, like Hut 8 is doing. And yeah, it'll certainly look a lot different than what the industry looks like right now.
So TerraGo was the acquisition you're talking about, correct?
Mm-hmm. That's
okay,
right.
so
yeah.
Within that, obviously, recurring revenue services, that's a big strategy that we've seen, some diversification in a lot of companies that have started to do this. Do you see this being a continuance in your strategy during this bear market? Obviously, we'll see maybe some M&A activity, but do you see it maybe going out into some of the other ancillary markets that help support what's happening in crypto?
Yeah, absolutely. I can't give a sort of percentage or confirm sort of where or what percentage of the business is going to be our prime focus in this bear market, because again, we're opportunistic. We've put our balance sheet in such a position so that we can be opportunistic and agile with respect to how we continue to grow our business through this bear market. But yeah, absolutely, we see incredibly compelling margins from the Web3 services and infrastructure services space. You can sort of look at Hut as like the Amazon Web Services, in its early days, and us being, really one of the primary players who are going to be providing the support for blockchain gaming companies, for node services, for NFTs, even exchanges and dexes, all of those different projects that will come out of this bear market and survive and thrive this bear market because they are integral to the health of the ecosystem. They all need data storage, disaster recovery, security, a company that understands open source and decentralized systems. So yeah, and the margins there and barriers to competitive entry are incredibly compelling for Hut. And so yeah, that's a piece of our business that we're incredibly excited to continue to focus on.
Let's go into the regulatory side of things. You mentioned, Senator Lummis and Gillibrand, their focus of a bipartisan bill to really kind of attach to what's happening in DC right now, which is a bit of a shift within the powers, obviously, as we are starting to head toward the midterms. With that being the case, and you've got ESG scenarios that DC is a big proponent of in terms of kind of whether you look at sustainable energy as a long-term effort or the potential of it being a lead-in to what happens within the crypto space. This could be one of the critical points of contention, especially in Capitol Hill, where energy consumption for mining could be a determinant in how we address regulation. So with all that being the case, what are some of the steps that Hut 8 is taking right now to kind of offset that perception in the regulatory guidelines?
So we take building relationships on both sides of the aisle and north and south of the border very, very, very seriously, because there is still a tremendous amount of misinformation in the media as to just how pollutive proof of work mining actually is. It actually uses less energy than air conditioning does in the US in the summer. It uses less energy than tumble dryers. And there's some really interesting research coming out of New Zealand. There's an ESG portfolio manager there by the name of Daniel S. Batten, who's come out with some really interesting research about Bitcoin mining's infrastructure ability to reduce methane emissions by about 5.3%. And as per the references what I mentioned earlier about ExxonMobil and ConocoPhillips doing these proof of concepts with miners to effectively reroute flared and methane emissions to instead of being vented to the atmosphere, being put towards digital mining. There's a tremendous amount of education that still needs to be done on both sides of the aisle, and Hut 8 takes that very, very seriously. We're very close, again, with regulators and politicians up here in Canada and south of the border. And so we really think that it's on us as miners And also it's on us as miners and our relationships, for example, with renewable operators, because there's quite a bit of compelling data about how mining fortifies grids and actually facilitates renewable operators, solar and wind, having sort of a 24/7 on taker of, or off taker of demand. So it's really on us to establish the right partnerships, to get loud, to continue to educate, and just be a part of the conversation with data, because yeah, there's still a lot of misinformation out there, and the benefits that technology brings to the environment much outweigh the purported risks that are out there.
Well, and I think you hit on it there, is the misinformation around it. And this happens in any emerging tech. I mean, it obviously happened in the era of internet regulation when you looked at some of the federal guidelines that were put in place for regulating the internet. And I think we'll probably see that within, well, at least in the beginning of how regulation will come in. I think we'll most likely see stablecoin first. Obviously, we'll start to see a lot of securities layers, and really how it impacts most of the Bitcoin projects and crypto projects in general out there. All that being said, you look at the potential here is really positive, I think, in the sense that we are seeing a bipartisan effort here. Could really become something if we start to kind of edge out of this downturn from an economics position. We could be in a really good place. I want to talk about a couple of things in terms of moving forward, and also just in general. I mean, 7,000 Bitcoin, about 1.5 billion you guys are holding. If you look at that kind of market position right now and the impact, is HUD-8 or are HUD-8 hodlers? Are you in this pretty much, this is kind of our plan, we're not deviating from it at all?
I mean, look, again, never say never. The things are incredibly volatile. We have to see sort of, where inflation ends and where we end up from a rate rise over the next couple quarters. But absolutely, internally and as part of our public mandate, we are OG hodlers. And again, we're able to do that because we've set up our business with diversified, sticky, alternative streams of revenue to help us keep the lights on. We've been very balance sheet first in terms of how we manage our business and how we grow our business in a bull market. Extremely conservative, which we got a lot of hate for in the bull market. But now, honestly, we look like heroes because we have one of the most healthy balance sheets in the industry. So, but yes, we are OG original hodlers. And as it stands right now, we plan on maintaining that as long as possible.
So you guys have been notorious about, really kind of leaping in and grabbing tech at the right period of time. Timing is everything right now, especially in production, and some of the things that we've seen with supply chain, et cetera. Nvidia, of course, has been struggling. A lot of the reasoning behind it has been indicated toward their focus on the Bitcoin market. Now, granted, the gaming market is still a big part of where Nvidia goes. They're going to be fine, but the fact is that they are seeing declining revenues there. Do you see that continuing through the bear market, especially with the consolidation of miners? Because we may not necessarily see miners strategically as good a position at HUD-8 is in terms of acquisition of new equipment. What are your thoughts on kind of that line list of technology that's coming in for mining?
Yeah, so that's a really good question. And I will say that we certainly have seen prices, for example, on older generation equipment come down quite a bit. We actually got quoted, I think, under $30 the other day per terahash, again, for equipment that had been going for $90 to $120 a terahash last spring. So I think, the Nvidia GPU equipment that we purchased last spring, it was the Ferrari of GPU miners. And the significance of that is, let's say Ethereum goes to proof of stake tomorrow morning, we can easily pivot and just mine the next most profitable GPU-based proof of work coin. And I think, based on what we're hearing, is all of that GPU-based proof of work hash isn't just going to die if Ethereum goes to proof of stake tomorrow morning. We do think that it is going to be redeployed to other proof of work networks. So, right. Like, for example, like the Ethereum Classics, I mean, even Ravencoin, there's a ton of other potential coins or chains that could be mined. And we do think that there is going to be some movement towards those chains with that hash power. So, and So, I don't know if I have an outlook on Nvidia, but I can certainly say that for us, we don't think that it's just going to be the end of GPU proof of work.
Okay. All right. Let's talk. Lastly, I want to hit on. I know we're going to cut short on time here, but when you look at market trends leaning forward, there are several sectors that are way oversold right now. Obviously, we see this both in the crypto space, but also in innovation and stocks, all kind of flying around this. Then you layer in the potential that you mentioned earlier of adoption, whether it's through payment rails in the Lightning Network. We see a lot happening within that itself. Obviously, the stuff that's happening with AMP and, or I should say, Flexa, and what's going on with Gemini Pay and FlexiPay. A lot more retailers starting to move in this. If you look at a couple of trends, what would be some of the trends you're watching for right now that would develop during the bear market to be positioned to really kind of catapult once we do hit the fun bull market?
Yeah, so I think it's if you look back to 2018, 2017, 2018, 2019, like what was being built and what was born. So you had the birth of NFTs, you had the birth of
Yeah.
DeFi, birth of companies like OpenSea that now have something like 20 billion in revenue annually. So I think it will be really interesting to see sort of how the NFT market matures. I think we're certainly going to see the blockchain. I'm certainly watching the blockchain gaming space, not only because those are customers that Hut 8 is able to support now from an infrastructure perspective and disaster recovery, but I think there's been a tremendous amount of investment from traditional gaming companies into blockchain and decentralized systems for amplifying in-game experience and tokenizing in-game assets. So it'll be really interesting to see, like, let's say what a Dapper Labs is building during this bear market and comes out with, or an EGLX Enthusiast Gaming. So I'm certainly watching gaming trends. Yeah, I think that's the one trend that we're really watching closely and think is incredibly interesting. And then obviously, of course, adoption from the PayPal and the Stripes and the Shopifys of the world, just seeing how that continues. And it's incredibly, like I said, it's incredibly good news to see how, for example, the Lightning Network is at all-time highs and capacity and adoption and usage is everything, right? And that's what's very unique about this market versus the last bear market in crypto. So.
Yeah, for sure. We have another show called Metaverse Insider that focuses on blockchain gaming, NFT focused. And it's starting, we've ramped it down just a little bit during this particular cycle impact, mainly because of the need for the audience. But that show gets ready to spin up, and we are doing a lot in the area of emerging games, because I would agree with you. I think the gaming sector, along with payments, most likely will be two of the big icons of this particular era in terms of new development, for sure. Hey, Sue, it's been great having you on the show today. Thank you so much for stopping in. We always love to have you.
Thank you so much for having me. Love you guys, and stay sane.
All right. Okay, you guys are tuned in over on the podcast right now. Make sure and jump in over here on the show here on YouTube, because this is really where you'll get a chance to catch all these executive interviews. It's where we do our deep dives. It's also where we drop a lot of our live videos right here on our YouTube channel. And you'll get notifications. All you have to do is just click the subscribe button. If you are already subscribed, make sure and like a few videos. It's going to seed them up in your feed. It'll give you a little bit of algorithm juice, and you'll see more of what's happening in the tech, blockchain, and crypto space, all from right here on PBN. Of course, if you want to reach me, it's out on Twitter at Paul Barron. We'll catch you next time right here on TechPath.